Nearly 2 years after its controversial enactment, TARP will be laid to rest this weekend, and at a cost far less than the original $700 billion price tag. All the big banks have repaid their bailout money, but a handful of regional banks are still clutching to billions. Kevin Fitzsimmons covers some of them for Sandler O'Neill. He's been named best stock picker for banks by the Wall Street Journal in its Best in the Street surveys. So, Kevin, all the giants have paid back. Government may even make money off the transactions. But when it comes to these 600 smaller banks, I'm not asking why they haven't repaid, but why is there incentive for them to repay right now?
Well, there isn't much, honestly, right now, because we're still dealing with a pretty fragile economy. Many of the banks that haven't paid are still in an unprofitable position or just coming back to profitability. Their level of problem assets still remains very elevated, and their situation really is hinged to what we hear about in the overall economy, that things seem like they're getting better, but very slowly. So if they were to try and go back and pay the government now, the government, I would suspect, would require a pretty punitive capital raise to do that, or simply say no. So even though you mentioned TARP is expiring, TARP really doesn't end until looking out into the future. The big important threshold for the banks is 2013. The dividend payment they would have to pay increases from 5% to 9%.
Yeah, we're highlighting some of the banks that still need to repay: SunTrust, Regions, Fifth Third, KeyCorp. You're saying that basically there's not an incentive to repay now, not until really 2013 when these dividend changes kick in.
Well, the banks, when you ask the banks about it, they will be very careful how they answer it. They don't want to appear presumptuous that they have the green light from the regulators. As I mentioned, some of them are still working with very elevated levels of problem assets. Would they want to get out of TARP sooner rather than later? Yes. But most of the banks' common thread when they answer it is we have to do it when it's appropriate, not just for regulators, but we have to consider the shareholders. And with the stock prices where they are right now, there's probably a good deal incentive to possibly wait.
One of the banks, you point out an interesting transaction that just took place here with Cadence Financial Corp. And it sounds like some of these government arranged marriages might still be happening, or at least marriages helped by the U.S. government via these TARP funds.
Well, what was interesting about that transaction was we just haven't had much, if any, live bank M&A, which we really need to see for the health of the system. The FDIC-assisted acquisitions are going on, but they're slow and steady, and there's a long path for a bank when it gets to that point in the regulatory cycle. So we saw an instance where a strong TARP-free bank was able to acquire an unprofitable, still TARP-laden bank in Cadence, and was able to negotiate with the Treasury to repay TARP at roughly 68 cents on the dollar. So it creates a bit of a blueprint or a roadmap, possibly, to more of these deals in the future.
So if you're saying in the near term it's not likely that we're going to see TARP repayments, or less likely before 2013, then is there an opportunity here? Is it safe to assume that you're not going to see dilution of shares because a bank would have to raise capital by issuing new stock?
I think it depends on a couple things. It depends on the pace of improvement in credit and in earnings. If that did take place quicker than it looks like it's going to right now, or if the government simply, because of increased clarity on capital standards from Basel III, for instance, came out and required less punitive raises, or the third possibility is simply we see an increase in bank stock prices, then there would be a lot more incentive for them to act sooner. But I'm not saying it's entirely in the bank's control here. The regulators are probably controlling the exit here as well. And so part of it is up to them, and we'll have to see how that goes.
All right, Kevin, I know you'll be keeping an eye on it, and we'll have to check back in with you on that. Kevin Fitzsimmons there from Sandler O'Neill.